Hello and welcome to a CMS Forex Daily Market Recap. I'm your fundamental market analyst, Nick Nassad. Today is Friday, May 28th, 2010. We started this week and ended on the topic of Spain. Fitch ratings slashed Spain's coveted AAA rating by one notch to AA+, noting high levels of government debt and dimmed growth prospects, two threats that also have thrown Greece, Portugal, and other Eurozone nations into crisis. This sparked fresh concern over Eurozone sovereign debt, leading investors to file out of riskier assets heading into a three-day weekend in the US. Currencies most tied to global growth, including the Australian and Canadian dollars, as well as the UK pound, fell against the dollar and yen in today's trading. After a brief rally in risk this week, Fitch's downgrade sets us up for a reversion to risk aversion next week, and it is a reminder of the enormous fiscal challenges still facing Southern Europe. Fitch said that Spain's sovereign credit profile does remain very strong, but sees its government debt reaching 78% of GDP by 2013. It also cited labor market inflexibility and said restructuring of regional and local banks will hinder Spain's adjustment. Those were the reasons for the downgrade. Spain's government today said that the economy will grow by 2.5% in 2012, down from its previous forecast of 2.9%. Spain had revised down last week its forecast for growth next year to 1.3% from 1.8%, after a predicted contraction of 0.3% in this year. The Spanish Prime Minister pledged to cut 2011 government spending by 7.7%, which was the first step in the preparation for next year's budget. And that promise came just one day after pushing through new austerity measures for this year and next in a bruising parliamentary vote. If we look at the euro-dollar pair, we see that the euro slid from 1.2450 at its high for today down to 1.2268 as we come to the end of this week's trading. So following yesterday's rally in the pair, we fall back into this sideways consolidation that we've seen between the 1.2150 level and the 1.2380 level. We had consolidated at the 50 period and 100 period moving averages in the 1 hour time frame at around the 1.23 level, but then we moved slightly below that prior to the week's close. That also broke an upward sloping short-term support trend line. So as we can see, the euro is still facing some pressure, and we could see further downside as the recoveries in the US and parts of Asia will continue to outstrip the slow growth in the eurozone, which will add to the troubles the currency is already grappling with, as it has many countries weighed down by stressed sovereign debt. When we come back next week, if we do see the euro continuing to slide, this 1.2150 level will be our very major level of support, as we did test it now twice and have rebounded upwards each time. Taking a look at this week's action in the euro-yen pair, here's our Thursday rally, and here too we did manage to move higher in overnight trading, testing the 113.70 area, but then as we entered the New York session, we paired our gains, moving down to consolidating between those two moving averages. This was also a 50% retracement of our rally from Thursday till the overnight high. Similar to the euro-dollar pair, if we continue to fall further, we should look to retest these lows around 109.30 from Thursday, and from Tuesday's low around 108.80. The risk aversion in today's markets hit the pound rather strongly, as overnight it had tested the 1.46 level again, but was unable to move above it. And as we went into New York trading and US equities fell, and especially as we had the news about Spain's downgrade, we paired our gains from the Thursday session until we hit our low near 1.4430, which was also our medium-term moving average. That put us back into the trading range we had seen in this pair, with our high had been around the 1.45 level and our low at the 1.4240, and now we see that we moved back below that resistance level. Now, one positive for this pair is that we moved above our longer term moving average during the week, and now we're testing that level as support. So if we come back from the weekend and we have some risk appetite again, we could see this be a launching point for another part of this rally that we had seen. However, if we focus on risk aversion, then we could see the pair trying to retest the low of this trading range. Similar dynamic in the pound yen as we moved above our long-term moving average in yesterday's trading, which was also a period of resistance, horizontal resistance. Then afterwards, after setting a high at 133.20, we see we topped out this rally and we fell in the New York session, and to retest this old level of resistance now as support. So we look to close above this level, which is a bullish sign, and again we're above our long-term and medium-term moving averages, which at this point is a positive signal. And if we zoom this pair out, we could see that there is still some scope to continue to retrace the sharp falls we had seen during parts of May. Now a lot will depend on investor sentiment once we get back from the weekend. Today we did have the Prime Minister pledge to cut the UK's budget deficit, which highlighted the country's shaky fiscal position, similar to what we're seeing in Europe. With massive cuts planned in public spending, the UK's short to medium-term growth prospects do look rather dim. Commodity currencies also gave back some of their gains from midweek as traders squared up their positions heading into the long weekend. Here we're looking at the Australian dollar, US dollar, and we see that the rally that we had seen in yesterday's session topped off around 85.50, and the pair retraced part of its steps, going down to 84.25 before finding support. That was a pretty shallow correction. If we plot a Fibonacci retracement of our move this week, we see that it was a 23.6% retracement, so a rather shallow one. And we look set to close above our resistance that had played an important role here at the 83.50 level. The US dollar Canadian dollar also probed lower, gaining against the greenback, setting a new low here at 1.0442, and we are looked to set to close below this important level of resistance. Well, it had been support earlier in the week of 1.0550, and we moved back to retest it as resistance in today's session. And with that, we will conclude our coverage of the Forex market for this week. For more news, videos, and analysis, please visit our site at cmsfx.com. I want to thank you for watching and wish you a great weekend.